Some of the biggest bellwethers in retail out with earnings this week, painting a mixed picture of consumer health. Walmart raising its full-year forecast. Target seeing issues with in-store theft, and Home Depot posting its biggest revenue miss in more than 20 years. Joining us right now for more on the sector is Jan Kniffen. He's the CEO of J. Rogers Kniffen WWE. And Jan, we want to talk broadly about all these things, but can I just hit your thoughts on Foot Locker right now? They just came out with earnings. Much weaker than expected, talking about how they're seeing weakness and they're going to be taking a lot of discounts to try and clear out inventory the rest of this year. That stock right now down by about 19%.
Yeah, that was a real beating. They also mentioned theft, just like we've heard from other retailers. But, you know, it's pretty hard to bet against Mary Dillon. So my guess is they'll get this straightened out at Foot Locker. She'll get them on the right track. They'll do a good job. And we'll see them come back. But right now, they're one of the few retailers that seems to have a continuing problem with the inventory. So that's a big thing to get fixed. And that whole segment of the marketplace in shoes, as well, in athletic shoes, as we all know, has been disjointed from the point of view of Nike selling direct to the consumer. Are they going to sell more through Foot Locker? That's all being worked out. And so we'll know a lot more about that as we go through this year. But clearly, that was a disappointing report. But not too surprising since you have brand new management taking over. Now they just hired in a new CFO. So, you know, I have high hopes for Foot Locker, but this was a terrible quarter.
Jan, what did you think the grouping of all of the retailers we've heard from tells us about the strength of the consumer right now?
It tells you, boy, you don't want to be selling electronics or home goods because everybody already bought those. But if you're selling something else, where inflation is basically over, and that's most of the goods business. If you're selling apparel, if you're selling accessories, the inflation has pretty much gone away, and your problems with supply have gone away, and the cost of bringing the freight in is pretty much gone away. So it looks like a pretty good time from the point of view of being able to approach the consumer with a price they'd be willing to pay. The problem is the consumer really wants to go on a trip, and they want to buy a plane seat, and they want to be at a resort, and so they're not buying the goods. The consumer looks relatively healthy still. Unemployment's still really, really low. Wages are still actually rising. And, you know, the grocery store inflation, if it's really going to fall to low single digits, and it looks like it could, then the consumer is going to be reasonably healthy unless somebody stops them from having a job. And so far, that hasn't happened. So it's surprisingly strong with the consumer. And yes, they were drawing down that excess money they had in their savings accounts. It used to be, what, $3 trillion. Now it's down closer to $1 trillion, but they're still spending it. We think they'll run out sometime in the holiday season, which is a little scary. But they still have the ability to borrow on their card. Yes, they're loading it up some, but their ability to pay back is as good as it is in normal times. So the consumer, strangely enough, looks healthy and is spending. They're just not buying goods at the level they were because they're more interested now in experiences and travel.
So let's kind of play that out into the broader Fed discussion we've been having this morning about whether the Fed will actually need to raise interest rates again. If the consumer's strong, if the job market is still strong, if inflation is coming down, what would you do, knowing what you know, having worked in the industry for decades?
Well, I look at this from the point of a retailer. Mm-hmm. This recession has been 6 months away for 18 months now. And it still looks like it's 6 months away if you look at the consumer. And most of the problem you get into our economy is consumer-led. And the consumer right now is continuing to spend. We have not scared them off. I don't see how, and wages keep rising at the 4%, 5% kind of rate, and inflation now has come down to where the wages are. It now seems very, very tough to me to get the inflation to come down further than where it is unless something happens with the job market. And right now, I don't see that. We have very strong jobs, and we saw it again in this last report. So right now, we have a consumer that's getting raises, pretty much reaching the level of inflation, and they've settled in. And I don't see how we're going to change that consumer unless the Fed keeps raising rates. I don't want to see a lot of jobs go away, but you don't have inflation go away or recession set in when you got 3.4% unemployment. You have to have 6. How do we ever get to that? So it just looks like we're settling in here at 4 or 5%.
Jan, finally, let's talk about the retail theft, shrinkage, online theft that Target really called out in its earnings call this week. But it's an issue that retailers everywhere are dealing with. What's the solution? How do you fix this?
Well, we have to quit fencing the goods. Obviously, when I was in the business, if we had been selling stolen goods, we'd have gone to jail. And there are people out there now selling stolen goods online every day. Somebody has to shut that down. The other thing that has to happen is there would have to be some sort of enforcement of theft out of the stores, and there isn't any right now. The stores aren't stopping it, and local governments aren't stopping it. And actually, the rules on that have gotten worse. You can steal a lot more right now without being prosecuted. So the criminals obviously know that, and they're taking advantage of it. And theft is rising at a rate we've never seen before. We've always had the problem. The industry's always had a theft problem, and we've always had shrink, and we've always had organized theft from our stores and off of our docks. It's just never been at this level, and nobody knows how to put the brakes on it right now because it's so easy to sell the goods once they've been stolen.